My name is Peter Zalewski. I'm the founder of the Miami Condo Investing Club. Check out our website, Miami Condo Club. I am a former journalist. I am a licensed real estate broker. Been licensed before since 1995. Go through witness work, but primarily I do a lot of consulting, and I work with investors, whether they're individual and or they're large, like university endowment funds or hedge funds. My niche really seems to be the distressed side when I do get involved with brokering, although it hasn't been a lot lately because prices have been going up so much. That being said, I set up a club to try to create a community for people who are interested in the condo market in Miami-Dade, Broward, Palm Beach counties, the Tri-County, South Florida region. So because it's summer and it tends to be a little bit quieter, why? Because it's hot, it's humid, and there's hurricane warnings. So you don't see a lot of people coming into town like you do during the winter time when there's events going out all the time. The weather's great, and there's a carnival-like atmosphere. Now, it's more so every afternoon you have to sort of buckle down, take cover. We're rolling out an initiative over the summer because it's a quieter time to try to get into the live podcasting. The podcasting basically will be live. Jenny and myself. Jenny's a licensed real estate broker. She's been doing it for some time. Prior to that, she did financing. Back in the day, leading up to the Great Recession. And ultimately, she's been my partner for everything but Condo Vultures, which was my original company, for another 20 years. So this is our first shot at trying to do a lot of podcasting. If everything goes as planned, we'll be doing a weekly podcast, myself and Jenny. Jenny's more of like in the trenches, or like she likes to say, heels on the ground instead of boots on the ground. She's working the deals, and I'm kind of doing that type of stuff. So that's a long way of saying this is our first shot at this podcast. We'll see how it turns out. I know it can only get better. So all that being said, let me introduce Jenny Huertas, broker, owner of CVR Realty. Check out her website, cvrrealty.com.
Peter, how are you? Can you hear me well?
I hear you loud and clear. Everything sounds fantastic.
Great.
So thank you for jumping on. This is the first time we're trying to go live. We've recorded a lot of videos in the past. It's a little bit easier because you can go through, you do it, then you run through an editing software, you add what you want to it, and lo and behold, it all turns out great. But it does take a lot of time. And one of the things we're hoping to do, Jenny, with this podcast is be able to shoot it live, and people can tune in. Ideally, home, maybe they're in the train, maybe they spent the day at work, and instead of tuning into some kind of radio station or a song, you might be able to get some real estate news once a week about what's going on in the South Florida, in the Miami condo market. And Jenny, there's nobody better than you to be able to kind of give this.
Thank you, Peter. Yes, I do specialize in greater downtown Miami and the beaches and condos. That's what I do. Sometimes I do homes, but most of the time it's condominiums. So we rely in a lot of times on Peter's data. We work together on that sense. He, as he said, he's like a macro, and I'm more like on the trenches. So yes, we this is an interesting time of the year for real estate and in general, because we don't know what's going to happen. So we can see a lot of trends in the market, things that we are looking at, what the people are looking for, etc.
So, Jen, big picture. Tell me a little bit about your background, how you got into real estate, the financing you were doing prior to that, and we'll kind of take it from there. We'll sort of introduce you to the audience. Some people might recognize me because I have the Substack, all kinds of regular stuff, but they maybe don't know you a little bit. So can you just give us a short little preview or overview in your background, especially as it pertains to Miami real estate and condos?
My name is Jenny Huertas. I'm originally from Colombia. I came here in 1992. I went to college for business administrations, focused on the tourism industry. I have a boutique agency, and then the internet came along, and I switched first to financing. And I was a mortgage broker, and then I became a real estate agent. I did work for pre-construction. I work on also there were pre-construction, new construction, and there were conversions. I worked with Kirsten International, and then Peter had the famous idea one day, say, "Hey, what do you think of Condo Vultures? What do you think of the name?" Which I thought it was very catchy, and it could be either way, good or bad. And we have experience on that. We have people that say, "Oh, your company is Condo Vultures. I don't want to show any property for you, for your clients." And I say, "Okay, it's only like $10,000 more listings, so that's okay." We became popular because we have the buyer's representation model, which nobody does in this market or in any for that matter. Everybody wants to do full service, and we specialized in buyers for many years. Obviously, after Condo Vultures, bulk deals, a lot of millionaires came and took advantage of the incredible prices that we saw in 2009, 10, 11. Those times won't come back, I can tell you that. But we became.
Hold on. I got to push back on that, Jen.
I know.
Jenny tends to be more on the optimistic side. I tend to be a little bit more on the pessimistic side. Remember, I was a journalist for a long time, 13 years.
I know.
My highest position, I was an associate editor of the Southport Business Journal. In question every single thing a developer says. Why? There's nobody to push back on them. And this is a market where everybody is on the sell side. They're all fucking you stuff. I'm not going to say they're snake oil salespeople, but they're all trying to sell you stuff. We don't have state. Yeah. As a result, a lot of the money that's generated is coming off of real estate taxes. So what does that mean? That means if you can sell a property for $1 million versus $500,000 and you charge a 2% property tax annually, there's a big reason why you should always be optimistic. That being said, Jenny, you're in the market, you're in the trenches, you're showing the units, you're dealing with the sellers who don't need to sell because they have more money than God. And they can I'm looking at the data that tends to suggest a hell of a different story. So I just want to throw, please continue.
Well, not really, because I agree with you. There's some instances that that's the case, but there are some instances there's not. Especially if the property is well located and have waterfront, that is a premium area, that makes a whole difference. When you go from some markets, even in the same market, when you focus on buildings that were built in the last 4 years, as opposed to buildings that were built 15 years ago, then you have a different approach in prices and what the people are looking for. So the macro is great because it shows the tendencies. But when I tell you that it's not going to come back at the time, like in 2011 and 10, is because it was a financial crisis. We were taking advantage of the bankers, of the people that didn't have an idea what was happening here. Remember, Condo Vultures was the first company that put in perspective the market as we have stars.
Yeah,
now they
believe it or not, for anybody who doesn't know,
yes, you were the first one.
Yeah, June of 2025, I woke up one morning and Condo Vultures. I was a banking reporter at the time, and in the banking or Wall Street world, if you're a venture investor, you're going long, you're optimistic. If you're a vulture investor, you want the market to go to hell, you can go in there. Now, I'm originally from Chicago. I'm not going to claim that that's where the vultures come from, but there was a very famous vulture, a guy called Sam Zell. He was from Chicago. He actually grew up not very far from my family had some holdings. So there were two ways. So back in June of 2025, we were at the we hadn't even peaked yet. Mm-hmm. I could see it from the statistic. I registered the website, the URL. All of a sudden, I got people reaching out to me trying to buy the URL condovultures.com. Filed trademark applications to get trademarks in the United States. I don't want anybody else taking that space. Although Jenny didn't think anybody would want that space. But fast forward to where we went. It wasn't until Lehman Brothers crashed in September of 2008 that ultimately, the real blood in the streets, as I said, blood in the streets, when it really started to flow. And it took about 2-3 years after that point to kind of burn through all the old stuff, and then we started building again. But the moral of the story is everybody's optimistic until they're not. It's one of these situations where it's the stairs up and the elevator down. Just like you market. Stock market moves minute to minute, day to day. real estate market works week and month to month. It's just a long, slower process. So you might be optimistic today. However, it doesn't mean it's not all going to go to heaven.
Yeah, but I'm not
Please
optimistic.
not.
I'm not optimistic. I am not optimistic at all. I think we're seeing trends. Like I check my MLS every Monday, and I see how many
And the
units.
MLS,
Yeah,
MLS
in the
things are good
MLS,
and all.
I
You know,
have
it's called the multiple
listing
database.
service. Yes, it's a
We
database that
joined a club. They joined
yeah,
a club called the
exactly.
Realtor Association. And now keep in mind, everybody, if you don't know this, you do not have to be a member of this club to sell real estate and represent somebody. What you have to do is you have to get a license, and then you pay a fee to join this club. And what do you get for the fee? You get access to the multiple listing services as well as other things. Just like if you're a golfer and you want to play a certain course, you join the country. Now, if you don't join, you can still go play golf anywhere. If you don't join the Realtor Association, you can still sell real estate. It's just you get this database, and that's really kind of what it is. And everybody thinks a realtor is the only person who can sell it. No. That's just the club that does a great job marketing as well as lobbying Congress and legislators but sorry, Jen. The MLS
that's okay.
It's the golf course, like a country club, so the MLS is for realtors. Golf course is for people in a country club. Sorry, Jen, please.
Yes. No. Well, the MLS here in the United States it covers a lot of areas. Like we have a Miami Realtor Associations. We give us access to MLS on Southeast Florida. I don't have access to properties in Orlando, for example. They are listed. I only work on my area with the data I have. But it's only one. To be fair, it's only one. It's not like for example, in commercial real estate, they have different MLSs, if you will. You know, like different ways to show the properties. We have access, and therefore we have the stats. So we look at the stats. The stats supposed to be accurate. Not always they're accurate, but they're trying to make it more accurate as far as when you close, who closed it, what's the price, etc. I see an improvement on that.
Stop you there because you're in the trenches, but maybe the people watching, maybe they don't know. So what Jenny means by the accuracy of the MLS is understand when somebody does a deal, someone within that office is entering information into this database. It may or may not be correct. They're entering in, and it may or may not be intentional or unintentional if the information is bad. How do we know that? Well, there's been a bunch of situations where people have been accused of fudging the numbers in the multiple listing service for which they were fined and or they face some sort of public pushback. But the thing is, you're making a 3% commission. You trade a place for $1 million and you 3 points. You're putting 30 grand in your pocket, where if you do something wrong, maybe you just happen to inflate the numbers of what a unit trade for. More people might consider going to you as a listing broker because you've got a bigger price than anybody else did. See, and this is sort of one of the challenges. So that's why when Jenny puts out the disclaimer about the multiple listing,
yes,
you have to use government records. And in South Florida, 67 counties, all government records are readily available. The problem is it's a little bit difficult to navigate versus the MLS. You go to Realtor.com or you go to Zillow. Everybody goes to Zillow. Well, Zillow, I talked to a professor, used to be at Florida Atlantic University. He's now, I think, the University of Mississippi or University. And he said that 80 to 85% of Zillow is actually the MLS. Just to give you context. So information means bad information out. And the only way to get around that is use the government records. Sergeant, you were referring?
No. Therefore, when you work with the MLS and you an experienced broker or realtor, you just don't have to trust what you see. You just have to go to the public records and make sure that place sold for this and that. So, but it's a good way to see the market in front of you. So when I have searches, I do search for South Florida, just South Florida condos, is of 595 in the last 7 days, and I start noticing your light went out, Pete.
No, it's fine.
Okay. So
adjusting.
okay.
My battery was running low.
Okay, got it.
It looks like I'm moving a lot. That's because I'm standing. I like this.
Okay. So so you can see, at least you have an idea what is happening in the market. When you see that of 1,200 units that are in the market, 80% of them are decreasing the price. It's a trend. When you see that,
Jenny, is that really what we're looking at? You get 1,200
yes,
price decreases.
yes, we have, for example, we have 1,200 units new in the market, like least in the last 7 days. And then we have 1,700 of them that lower the price, decrease the price.
Okay,
So that's,
what's the overall total? I haven't looked at yet. I'll look at it on Tuesday because that's when I update our Miami condo clip.
yeah.
What's the total count? Last I looked at somewhere in the ballpark of 28 to 30,000. Is that what it is roughly?
Yeah, I don't know. I look for my market.
Okay.
So I can give you an idea.
Yeah,
I can give you an idea of my market.
I need to know what the overall. In order to understand the 1,200, I'd have to know what the overall big picture is. Do you happen to have that?
No. I only have.
So the audience knows. Last week, every week I do an index, a Miami Condo Clip index.
Mm-hmm.
We're tracking real time and we're tracking real time active listings and pending sales. We're running them through a process and we're coming up with a score, just like you would track the Dow Jones or whatever. And what this index does is it gives you real time what's going on. When you look at quote, that's actually from a few weeks ago or a few months ago.
Right.
What passed. Think about unemployment numbers. If you hear about the Fed is seeing unemployment numbers, that's what happened before. Look at the Wall Street. Look at Wall Street. Look at the Dow Jones Industrial Average, the Nasdaq, anything like that. That's telling you what's happening right now. So we could to track the market as well, and that's why I know there's between 28 and 30,000 units on the market. With probably more than a third, call it 40%, is going to be Miami-Dade County, and then the market, Jenny, you're looking at is what? Right downtown Miami and Miami Beach.
No, just started downtown Miami.
Just
right
came
now.
down to Miami. That's probably ballpark 3,000 or so.
Yeah, actually, active at the moment is 1261. At the moment.
1261 is the number of listings, or 1261 is the number of the.
No, because I'm looking for a specific market, specific conditions. I'm looking for 1 to 1 to 2 bedrooms, just like.
So you didn't cast a big net. You're like,
no. I'm doing it macro. Remember, you do the macro.
Yeah.
So when I do look the macro, I look what the people is asking us for. Basically, 1 to 2 bedrooms, 1 to 2 baths, 0 to half a bathroom. So it's like average of 800 square feet. 0 square feet to 1,200 square feet. And then I put the years because it's important. When I change the years, when I put years up to 2010, I have this price range. If I put 2011 to 2024, the price range goes up because what?
Jenny, can you explain why you're looking at the year and tie it into the Surfside collapse that occurred on the Barrier Island, just north of Miami Beach, place called Surfside? It nearly 100 people died. There was a $1 billion settlement paid out to the families of the victims. We've had all kinds of legislation that's changed as a result of this, because the legislators and the residents don't want it to happen again, but neither does the insurance company. So there's been a lot of changes, which made it very expensive on the maintenance side, special assessments, insurance. Everybody's getting hammered on kind of, especially the old ones. So when when you look at the years, you're looking at it. Why? Because there's new is better, or sort of talk about it, market.
Well, in this particular market, it's different than Miami Beach or Hollywood, that they have a lot of older buildings.
Which market are we talking about? Greater downtown Miami.
Greater downtown Miami didn't exist really until 2000 or so. We have very few old condos east of I-95, close to the water. So, but these condos that have 20 years, 20 years and less, after year 2011, first of all, in the first time that we built here from 2006 to 2010, we were building for the masses. So there were huge buildings, entry level, nice, but not necessarily brand names or anything like that. From 2011 and up, now we have all these brands coming here. So it's like super luxury. So you cannot compare when I do it. I don't compare it because it's a completely different product. For example,
you're pinpointing particular type of product.
Yes.
What is that product, just generally speaking?
Why I do that? Because
give us a description.
Okay, the description of the data.
This many units, this many.
Yes.
Rooms.
Yes. I took 0 to 1,200 square feet, which is, studios up to 2 bedrooms, not too big, because price and maintenance matter.
You
Just
want for
for,
efficiency.
I work for efficiency.
With 1,200 square feet, it's going to be very efficient rather than a one bed with 1,500 square
Exactly.
feet, which is going to be inefficient because your maintenance and your property tax is based on the square footage.
Exactly. And at the
Yeah.
time, from 2006 to 2010, the buildings actually were efficient. There were not huge units. I mean, there are some exceptions, but most of them were very similar in the sort product and the quality. Like the windows were already hurricane resistant and all that. The amenities were more or less the same. Now you look at the newer buildings, then you can find a one bedroom with 2,000 square feet, and they are 2,000 per square foot. Why I'm looking at that differently? Because there is two type of customers. One is the one that wants efficiency, wants to rent it, want to keep it for a few years, and then resell it. And the other one is the luxury that, they have one house in London, one house in Cancun, and they want to have a place in Miami. So it depends on what the people want. When you say that I'm more positive than you are, it depends on my client, because clients are very pessimistic, and then
But then if you get a pessimistic client, then you're going to be pessimistic.
of course, and that test my heart depending on the client, because I have clients that want luxury, and that's the place that they wanted to have, and they don't have a problem with it doesn't really make sense financially. You ask.
Okay. So let's continue with that. So what's the vibe of your customers right now, or your clients?
Okay, I have several types, but because we have also I manage Canadians, and I have agents from Brazil, Argentina, and the States, and Peru. And so we have people from France. So we have people from different places, and everybody has a different taste. They're looking for different areas, for different price range. And, to be honest with you, sometimes, and I never thought I was going to say this, but sometimes new is better, because you don't have to have all these special assessments, because you don't have to worry in 10 or 20 years, now 20 years, before you had 40 years to worry about it. So yes, and you know what? The maintenance fees are high for everybody. Remember, before we had maintenance fees that were 60 cents per square foot. And with all these special studies that they have to be done, and the special things that all the buildings have to do, the price of the insurance, the price, even the water, because I live in a condo, I know. So the prices were up, and now it's no exception. Basically, yes, it is a little bit more expensive in super new towers, but it's not double or triple that it used to be. Just because of what happened.
Let me stop you right there. Let me give some context to the audience. So there is large property management company. Typically, what happens is realtor associations. Most people who are elected, they may or may not know anything, but they put their name on a list. They live in the building, therefore they run for election. Once they get that, then what happens is they hire a company, comes in, third party company comes in and manages everything. Just like think about like city government. You got a city commissioner who may or may not know anything, and they have all the professional people around them to advise, and then the city commissioner makes a decision based on what all the experts say. And so when you look at maintenance fees, there is a big company called First Service. They used to be called Continental. Now they're called First Service. They're one of the big country in North America. So they came out with a study last August, and what they found is a study, they took a look at 15 different markets, everywhere from Vancouver, Toronto, Miami, Los Angeles. They were even down in Mexico for one of the markets. I don't think it was cool. I'm going off memory here because it's been a while. But what they found in Miami-Dade County is if your building was, say, 5 stories or below, I'm sorry, it wasn't stories, it was based on unit count. If your unit count was under memory, let's call it 200 units or less, you were looking at $1.05 a square foot on a median basis. And what that means is a square foot place, you pay $1.05 a foot, you're spending. Now, if your building was, it actually went up. You would think it would be the opposite, but it actually went up. It's somewhere in the ballpark of 122, 125 And the reason it went up is I guess there was just more liability related to insurance. Insurance represents, according to this study, it was called Riddler. It was called benchmark, the benchmark study. But they said don't use it as the benchmark. We're going to call it the benchmark. And what they found is it was somewhere in the vicinity of 122, 125. But insurance again, 22%. And as maintenance fees going up, a lot of it's going up because of insurance. Why is insurance going up? Well, on the west coast of Florida, we had all these hurricanes. And just because the west coast got hit doesn't mean the east coast is. And then the other thing is you have these towers. You have this tower that collapsed. I put out a newsletter. It comes out every Sunday. It's called the Miami Condo Market Mondays. It comes out every Sunday. Been doing it since 2007, roughly. Hit a little pause there where I was in my quiet period of doing waiting for the market to crash during the first trouble me show. But I came out this Sunday, and the report said there was a Clearwater, which is right around Tampa area on the west coast. Clearwater Tower, 12-story tall, built in 1975. They went through and they did what's now required, an inspection called a milestone inspection report. It's like a 30-year point. When a building gets 30 years old, the state of Florida now, because of Surfside collapse, says at the 30-year mark, you need to go ahead and do this special study where you bring in these experts, they take a look, they figure everything out, and then they give you a dollar amount as to what needs to be spent in order to make sure the building was safe. So this building, primarily filled with people on fixed incomes and retirees, it went through the inspection. It's funded, and they were doing the work. And during doing the work, is golf right on the water, right on the beach. One of the main support pillars, it's splintered at the bottom, and the construction workers and now this part of the construction workers out there smoking maybe smoking a little weed, whatever they're doing. They look down at the beam and they say, "Oh my God, this thing is smoking." So what do? Well, they know that they could face some sort of liability, or there could be, people's. They call 911 within minutes. Fire, police, and engineers. I guess over in Clearwater, they now have a special response team. They have all the poles, the steel poles and stuff. They have it all set up. So when something like this happens, they could just descend on it like ASAP. And that's what happened. Everybody was forced to evacuate immediately. Subsequently, they've let people come back in after a lot of overnight shoring up the building occurred. But what I will tell you before I go back to you, Jenny, and why these maintenance fees are gone up, because it's case. So the city of Clearwater says of the residents, come back, no problem. But if you live in and around that particular pillar that may or may not, we're not going to let you in, but everybody else in the building, no problem. But they said, but we do have a couple rules. Coming back in, and assuming you're willing to come back in. Remember, built 1975, 12 stories, real similar makeup of what we saw on the first side. Some of the rules are, one, you can't do any construction. You can't do any repairs. You can't get any deliveries of an item that's 75 pounds or more. And you can't move anything in your apartment that weighs 75 pounds or more. So my question to you, Jen, is would you move into one of these units, given the fact that this pillar had splintered and was separating down at the bottom? And this is, if you think of 4 main ones, I know there's a lot more. But if one of them's going bad, kind of wonder. So Jen, would you move into a building that had this risk, and now there's a bunch of steel poles holding it up and they're shoring it up, but they tell you can't move anything of 75 pounds or more, and you can't get delivery at 75 pounds or more? And then also too, what are the psychological effects?
Yeah.
Especially with the maintenance. Can you sort of just address that? Now, Graded Out to Miami's much more newer product. It's all been built since 2000, but can you just sort of talk big picture?
I think nobody wants to live under those circumstances. It will be nerve-breaking, to say the least. You probably leave and you have to pay still your mortgage and go rent somewhere else, and you don't have to cut your losses. But I think a lot of people that are investors, they will look for things like that, because not as extreme as this, but knowing the risks. Because if the price is right, because they can take the risk, they have a diversified portfolio, so they can do things like that. And if it doesn't work, one covers the other. So it depends on the really it depends on the people that wants to buy and what they want to buy. Our job is to tell them, sit down with them and tell them, okay, you want this, but these are the risks. You want that? This is your price. So what we see in the market, what the people are looking right now is for something that makes sense financially, not as good as it was in 2008. I mean, I know that you think that prices are going to go 50% of the dollar, and I don't think so. I don't think so.
No. I made a call in January. I got a call from a reporter at the South Florida Business Journal, which is a weekly publication down here. At one point I worked for, I was an associate. I got a call from the reporter. The reporter's doing a trend story about what's going to happen in 2020. That's simple. We're going to see a price decrease of 40%, 40, from the pandemic high. Now, remember, during the pandemic, what had happened? So Super Bowl's held here in Miami. Shortly thereafter, less than a month later, the entire country shuts down. The world shuts down because of market stalls. People start trying to unload, can't get anything for it. Fast forward, and during that time, an Amazon package comes, you're afraid to touch it. You got to wear gloves. You got to wash it. You got to do all this stuff. Fast forward a year or so, and then you got a breakthrough with the vaccine. You're starting to understand more. Things are playing out. All the people were dying in Italy and in New York and everywhere else. It starts to not calm down, but it starts to get a little bit more predictable. And state of Florida says, you know what? You don't need to wear a mask. Come on down. You don't have to wear a mask. And if you come down here during spring break and you want to torque on a police car, get up there and shake. You're behind on a police car. Yeah, no problem. I'm saying that, because that's really what happened. So many people came here. We saw prices and transactions double, triple, quadruple. So the prices we hit back in the winter of 21, 22 are so high that since then, we were starting to see a pullback, not only in transactions, but now the pricing is finally starting to erode and disappear. And what I'm telling you is I'm calling a 40% price drop, and it's based on, where am I pulling it from? Because if you run the numbers and you look at where we were part of the pandemic, my 40% price decrease would simply offer a little bit of an appreciation based on where we were in 19.
Yeah.
Tremendous surge we saw because everybody flooded into town because they wanted to buy a condo. They didn't know what their, future was going to be and their family. And maybe some of them wanted to work on police.
I know you look at the numbers and you show me the numbers, and I agree with you on the whole, on overall market, but not in the overall market, but not in certain sub-markets. So that's what you had to look at. Listen, one of the things that, I am concerned is we have so much reconstruction in greater downtown Miami behind the water. I live across the bay, and behind me there are lots of construction. So when you look at,
and so people understand, you got the Atlantic Ocean, then you got Miami Beach, which is Barrier Island,
right?
Then you got a bay, and then you got mainland.
Yes.
So you live effectively on the bay.
Mainland, the bay.
So you're on the mainland, but you're on the bay. And what you're saying is construction that's occurring is going on in the hinterland, going away from the water. And what kind of pricing are they getting for this?
That's the thing. What
do they want?
The pre-construction. What are they getting for in pre-construction? This is interesting that we go there for the following reason. First of all, these buildings behind, there's no land, not much more land to develop. Yes, land is expensive. Number two, the area had gentrified. We have Apple Store, we have the restaurants, we have all the stuff that Brickell has already for a few years. I'm in downtown Miami, close to the port and across the street from the arena. But my point is asking for, or they're getting these prices because they start closing in the next few months. And this is where it's going to become interesting, because one studio in pre-construction, 400 to 500 square feet, it's nothing below $700,000.
Okay, so let's run those numbers. $700,000. And what's the square footage you want?
Let's say 500.
Let me just run it. So you're talking, you're north of, what do you ballpark, 1,200 a foot?
Yes. Of course, it's finished. It has a bed, everything, because they're all approved for Airbnb until it's not. So there's,
So Jen, one way that investors can quickly gauge whether or not they should do due diligence, take a look, is something called the 1% rule. 1% rule says your monthly rent should represent 1% of the value. So in theory, in 100 months, you paid the thing off. So 1,000 square foot place, 1,000 square foot place that's worth $100,000 needs to generate $1,000 a month rent.
I
Now,
got
the
it.
place
I
you're
got
talking
it.
about 700 grand. That means they effectively need to generate $7 grand a month in rent. What kind of
Yes.
rent for a studio? 400.
Yeah.
And what kind of rent do you think they can really get for this $700,000?
Well, if it's a monthly rent, they cannot get more than $3,500.
They're getting 3,500. The unit's worth 350 grand, but they pre-sold them with deposits down at $700,000.
Yeah.
They're going to have to get $7 grand a month in rent, or more likely, the landlord is going to subsidize the tenant to say, "Somebody, please move into this place,
Right.
and I'll give you 50% off what it really costs me."
Yes. But the trick is that
Yeah.
this is Airbnb. So they're expensive hotels.
Yeah.
So let's say that you get, I don't know, $300 a night. So that get closer to what you will
But
need.
a lot of the hotel analysts, and I don't study hotels, but I've written about it, talked about it. They assume they're going to have 70% occupancy or 30% vacant.
Yeah. Mhm.
Take 30 days. Effectively, you're looking at 21 days of rent. So you said
Correct.
21 days of overnight occupancy, and what'd you say, 300 a night?
Yeah, that's the minimum. Let's say
Okay,
300.
so let's call it 500 a night. Yeah, you're still upside down.
Yes.
Because
Yes.
remember, property tax is 2% of the value. So on a
Yeah.
$700,000 place, at 2%, you're looking at 14 G's, over $1,000 a month just on the property tax. You're
Yeah.
leasing it out for 350. Now, Jen, what we didn't mention is the current administration, not to talk politics, the current administration is really taking a aggressive deportation stance. I was looking at some aviation numbers for Miami International Airport, and year over year, international arrivals are down.
Yes.
People aren't coming at the same pace. Maybe it has to do with the economy. Maybe it has to do with the fact that the dollar had been very strong until Liberation Day on April 2nd, when President Trump announced 10% minimum tariffs across the board. Jim, what happened? Well, first of all, are you seeing people coming to visit? I mean, you're originally from Colombia, but you've been in South Florida for. Are you still seeing people coming? And if they are coming, are they willing to buy, given the fact that there's all these concerns about, German tourists being detained at airports and basically being deported or kicked out, and all
Yeah.
the inconveniences about, related to this, because
Yes.
Miami is so foreign national. 54% of our community is foreign born, according to Census Bureau data.
Yes, actually, people is not as eager as coming here as they were before. It's a lot of unknowns. What is going to happen? It's a lot of fear, and it's also they're waiting because the dollar is getting weaker. So now they're holding off. Before they knew that the dollar was expensive, and they were
Right.
buying at that price, no problem. But now that is changing. They're saying, maybe I should hold on to see what is the bottom line for the dollar, so my money is worth more, and then it maybe makes sense for me to invest. As far as coming to visit, it depends. Some people would still come, but a lot of people is not coming. I mean, I noticed it's just like a perfect storm, right? Right now, it's the beginning of the summer. Is uncertainty in the political situation of the world. Really, it's
For
not
anybody
just
who
us.
doesn't know, one of the major credit rating agencies called Moody's on Friday after the markets closed. Please, whenever you want to bury a story, you do it on Fridays. You release it on Fridays because people aren't paying attention. They're out going to parties or weddings or whatever. They announced Friday evening that they were downgrading the United States credit rating.
Yes.
All of the debt that's out there and uncertainty about what could happen with our ability to generate money, especially a big, beautiful tax bill makes its way through Congress.
Yes. And so it's a perfect storm. So that's why we see listings that are in the market for the last 200 days, 300 days. And now we notice that any given property is staying in the market an average of 100 days. I mean, like 2 years ago, it was like 30 days. That's it. It was like listing, on listing, sold.
Remember,
Now- And it was expensive. And it was expensive.
When you could work on a police car and you came down because you didn't have to wear a mask, you had people queuing up at an open house and they would get multiple for a place. There's been stories coming out about buyer's remorse. Bankrate, which is a financial news, an educational website. They came out with a study saying it's $21,000 cheaper annually to rent in Miami than to own.
Yeah.
A lot of that's based on these people who came in during the pandemic so they could work on a police car. They overpaid so much and now they're upside down. Now it's actually cheaper to rent. But that doesn't always stay. What that does is it tends to trigger a sell-off. Hence my call of a 40% price decrease.
Yeah, I mean, there is also something interesting that we had to talk about, and is that the interest rate were very, very low in 2021. Super low. Then they start going up. Now it's 7%. So now almost nobody can, with the money that they make here, across the board, it's very difficult to own something. So we became like the New York in the years, before, like the 2000s, where nobody can really afford to buy. So yes.
Well, and Jen, if I can interrupt, but that's why Moody's is so important. Because of Moody's concern and downgrade of the United States, what it means is something called the 10-year treasury. It's what mortgages and stuff are based on. So typically what the banker will tell you, if someone's got great credit, that's where you listen to when like Mortgage News Daily comes out with like, okay, this is the mortgage rate. But if you're kind of in the middle of the road, an easy way to figure it out is what is the federal funds rate, or excuse me, what is the 10-year treasury rate? And you add 3 points. So it went up today after the Moody's downgrade on Friday. It's north of 4.5. So what that means is 4.5 is what it costs the bank for money. They're going to put a spread on it of 3 points. So that means mortgage rates are likely at 7.5, going to 8. And what's important to remember is when interest rates go up, housing goes down, housing goes up. This is why President Trump, again, is jawboning and talking about Federal Funds Chairman or Federal Reserve Chairman Jay Powell bring down interest rates because he needs them to come down to keep housing going. Otherwise, if you need to get out, who are you going to sell to? Well, you're going to sell to somebody who's going to be looking for a serious discount.
Yes. No, I bet you there is going to be a lot of opportunity because all these things that we mentioned before. And also, I seen a lot of noticing. I don't know if we can talk everything today, but I can tell you some things that I've been noticing. Okay. Remember when in 2011, when the Melo Group came with this program of 50% down, so where the developer gets 50% down toward the, like between now until the time that they deliver the property, like groundbreaking, blah, 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 half, 10%, 20%, and 50%. And then the person come and close. Now,
if I can interrupt, let me give people the background. Because I think you're going to get the closing line. So the lead up to the Great Recession, if you wanted to buy a condo, you put down 20% deposit. So if it's $1 million place, you got to put down 20%. 10% of that would be put in a bank account, an escrow account that the developer can touch. The other 10%, they could burn. They can use it to construct. What happened? We overbuilt. We had all kinds of speculators. We had people buying contracts, retrading the contracts. We were doing what they did in the 1920s Florida land boom. That's what happened. Yeah. And then the market went to shit. The market went to shit. No bank, because many banks got shut down, some of which we were able to buy failed condos from before they got shut down. Jenny and I did a deal with an asset from the former Lehman Brothers. So it was a good time. So banks are like, listen, we're not giving you any financing. You got too many speculators, blah, blah, blah. We're not going to do it. So a group out of Argentina called Zamelo family, they were here building rentals. And they said, you know what? We're going to build an Argentinian style product. We're going to sell primarily to people from Argentina who want to put money in the United States. Everything is going to be Argentinian oriented. It's just going to happen to be built in the United States. Built in Miami. What they did is they adopted the approach of Argentina and Latin America, which was you pay as a buyer as we go, and the money you bill us, we're going to use to construct. So ultimately, the buyers hit 50% in. So if they were to walk on it, they're losing a hell of a lot more than that 20%. And that's what allowed us to kind of jumpstart the market, because no bank would touch this. So many of them got shellacked. Back in the day, every Friday between 2 and 3 p.m. Eastern time, we would wait to see who the feds were shutting down. They were shutting down my front over and over and over and over. Now you don't have that because they've shifted the risk. They've gone to the 50% deposit, and they also have prime lenders who aren't FDIC insured doing it.
Yeah.
So Jen, you were just talking about back in the day what Mellows was. What are you seeing now?
Now we start seeing that they say, no, you can put just 30% down. Now,
Time out. So when we began this back in 11, we haven't corrected thoroughly.
right.
So when we began, and typically the cycle is 7 to 10 years. So when we began, it was 50% deposit. And what you're saying today, when prices are north of 1,200 a foot, not even near the water, these developers saying, I need 50%, just give us 30%.
Yes. Not all of them. I seen it every day. I get emails every day. Hey, you now can get in with 30%. And then you can get a private equity, a private mortgage company,
Wow,
giving
so
you the
they're
loan.
bringing in lenders.
Yes. Exactly. So
And it's
they
not a bank.
offering it is. No, it's a mortgage broker. And so let's say they're getting creative in order to get more sales. And I also seen, not in the pre-construction, but I also seen more and more in the listings that owners are offering to hold the note for 5%. So that's very interesting because they're
We're Latin
creative.
America. We have
Yes.
1,000 people a day coming. This is the place to be. This is where you have the name brand, the Dolce Gabbana, the Aston Martin. There's no better place. Blah, blah, blah. Even though 35 towers
Wow.
sinking on the barrier island in
That's-
Miami-Dade County, but that's not a big deal.
That's the 1%, and the 1% of the world wealth comes here to play, and we all know that, and they actually own property. Therefore, people and normal people, for them, it's just almost impossible to acquire a place. So the other thing I am noticing, I know you didn't ask me, but I'm gonna tell you, is
Never stopped you before.
I know. It's because of the price, and because of the price of maintaining any given property, not just to own it, just to maintain it. A lot of the people on their late 50s to mid 60s, they're saying, you know what? I'm going to sell my property. I cannot afford to retire here because the
Wow.
cost is so high. Even when I have a 401k, even when I have investments, I need at least $10,000 to maintain this particular condo. So I've seen a lot of people trying to move away from not just Florida, the country. They're trying to live in, and I'm actually going to start relocating people because I've been asked. Okay, where to go? Spain is a great place. Portugal is a great place. Italy, they're getting more like you there and here, but you have Costa Rica, you have Colombia, you have many countries, Argentina, that are welcoming people. So there is, for example, one developer in South Florida that is from Colombia, and he's developing here, and at the same time, he's developing there. So he's hitting both markets. People that wants to sell here and go there to live, and people that are there and want a plan B for whatever, because there's also a lot of not much confidence on the political side there that want to invest here. So there's a lot of things that are moving parts. It's so dynamic. I mean, we can talk today, and maybe next Monday is going to be something else. And I'm going to leave something for next time because I'm telling you too much.
And on that note, this was our premier Miami Market Monday. I don't know what we're going to call it, but we wanted to just get it going, figure out some of the kinks, and you've probably seen some of them along the way technologically, but you can see from the discussion, the content, it's going to be very rich and it's going to be real time. It's not about what happened before. It's about kind of what's going on right now. You give them the macro, she's giving the micro. We don't agree on everything, but that's kind of what you need. If you're out there and you look for intel, you need to form your own decision based on the best information you get available. And that's what we're going to try to do for you every Monday. We'll work out the kinks, and hopefully by the time we get deep into the summer, everything is just sort of humming along. So, Jenny, tell people how they can get a hold of you. Tell them your Substack. I will put it all in the show notes. But tell them how they should reach you.
Yeah, they can reach me at Jenny Huertas Broker in Substack. And also CVR.
Can you spell that for them?
All right. It's JennyHuertas Broker. That's for Substack. And then for them, I have CVR Realty everywhere. CVRRealty.com, CVR Realty Instagram, CVR Realty Facebook. And my phone number is 305-865-5859. You can text me or reach out the way you want.
And again, your telephone number one more time.
305-865-5859.
And the website is C like Charlie, B like Victor, R like Romeo, Realty.com.
Realty.com. Like Condo Volto Resale, Realty.com.
Yes.
Okay.
So originally the Condo Vulture game was to take advantage of the downturn. Then CVR Realty was created to go ahead and the people who got in early to represent them on the way out. So that's how long Jenny's been playing this game. You can see she really maybe a little bit more bullish than but it's great because you're getting some great perspective.
I'm somewhere in between. But yes, we definitely have a lot to cover. So every Monday we will talk about something. If you guys want to get deeper in any of these particular things that we speak today, of course we can do that and open it for questions, whatever you want.
Jenny, I want to thank you for making time, and we're going to be seeing a lot more of you this summer. Although you got plans, you're heading to Italy, you're going to be heading to Europe, so you might have a little bit of a different background throughout the course of the summer. But fingers crossed, we're going to be able to start to build on what we sort of created today.
Absolutely, my pleasure.
I'm the founder of the Miami Condo Investing Club. Check out the website, miamicondo.club. A former journalist. I am a licensed real estate broker, although I don't practice much. Anybody comes to me, I have Jenny take care of it simply because I'm looking at the macro and she's got a much better sense and she can navigate the nuances of a very diverse type of South Florida real estate market. So, but I would encourage you, if you want to find out more information, maybe you're somebody who wants to go it alone. You don't need to work with Jenny. You think you can do it on your own. The club is producing statistics, data, a lot of data that I'm sharing with Jenny. It's all being produced there. Simply join the club. You can just sign up on a monthly basis. You sign up on an annual basis. In addition to all the numbers and reports we're putting out, we also do a monthly meeting once a month, get together, and I'll lay out all the data we've collected. I'll tell you what's going on. I'll tell you kind of where, I see the market going. That'll give you great insight. And then once a month too, you have an ability to kind of get together with other club members, talk shop, trade stories, trade business cards, do all that type of stuff. Our next meetup is actually going to be tomorrow. It'll be Tuesday, May the 20th. We're doing it up in Fort Lauderdale. It's for club members only though. So if you want to attend, go ahead, sign up with the club real quick, and then you can meet up with us, check us out for a month and see if you like it. But again, miamicondo.club. I'm Peter Zaluski. I'm the founder, and that was Jenny Huertas, CVRRealty.com. She's a broker owner. She's been doing it quite some time, and she's got a great take on the market. Thank you for tuning in. Hope everybody has a great day. Bye-bye. Ciao.
See you later.